Good morning. Good morning. How's everyone doing? Hey, Jerry. Good to have you back. Hey, Moran. How are you? Raj, how's it going, brother? Good to see you. Okay. Hey, Rookie Slayer. How are you? Flying to Iceland. Okay, cool. Dave, what's going on? Marcus, how are you doing? Well, let's see what we got here. Kind of a smaller profile this morning. Overnight inventory is long. Right, all the trading is above yesterday's close. And it's an inside session, which means it's inside yesterday's range. So when a market opens inside the previous day's range and stays in it, it's business as usual, right? The prices that you were paying yesterday, you're paying today, slightly higher today or tonight, because the overnight session is taking that cheap inventory from yesterday and selling it up, right? Selling at higher prices. Let's go take a look and see. I just want to show you guys. Yesterday we did a fail. We actually did a look above and fail of 72.75. We went to 72.71. So this level here was off by one tick. Okay, and so if you had the skill and the account, you could have shorted 72, say 65, stop 72.70, and I gave you guys a 71.95 target. We came close. Yeah, on yesterday's low. Right, so I think we were about 4 points off that target. That's a decent trade. We give you a 70-point trade. That is, for traders who complain that we do nothing but scalp, put your money where your mouth is. We gave you that trade easily 6 hours before it happened. We said if it gets to 72.70 and cannot get back up over it, that's where you're going to short. So here's the thing. For a 70-point trade, your risk would have been what? One tick. Seriously, you can't get better than that. Give me a trading room anywhere on earth that will give you a 70-point trade with one tick of risk. Now, these trades don't happen often, but if you had taken that trade and even made 50 points on it or 40 points on it, you wouldn't have to trade for the rest of the month, right? And that is how you trade intelligently instead of like a rabid dog chasing its tail, like all you guys are doing, right? chasing these trades, trying to capture trades and getting stopped out and blowing up accounts, right? Even if you had made 40 points on that trade, on one contract, that's $2,000, right? On 20 contract, that's a $40,000 trade, right? But you got to wait for it, right? You got to wait for it. You got to be able to take it. You got to be able to manage it, you know? You got to wait for it. You've got to understand the mechanics of it. Now, is it possible for a new trader to take that trade? No, it's not possible. You got to be, you can't be delusional when you're trading, right? So just letting you know, those trades are available. They don't come up all the time. But say you had taken that, if you had been a big trader, you do your 40 grand and then you can scalp the rest of the month, or you can take the rest of the month off and go on holiday and it's the 5th. So you'd have been done for the month. This is how you trade with brains instead of just chasing things around in signals and blah, 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 blah. Right? This is what I'm trying to do at the Trading Syndicate. I'm trying to give you guys who want those large trades. You wait for them, you stock them, you take the trade, and then you don't give the money back by blowing it on stupid trades. Okay? So having said that, now let's see for us what's here for the morning, right? That trade is not a beginner's trade. You got to have the cash to do it. You got to have the skill. You got to have the management skills, right? Yeah, you just can't jump in and start doing these things, right? So that's what we're teaching you, We're teaching you how to do this. You start small and you build up your level of skill, okay? All right, now let's see. Overnight inventory is long. It's corrected in J period half an hour ago and straight back up again, right? I think we have a poor high. Let me just double check. Is that a poor high? I think it's got 2 ticks of it. No, it's got 2 ticks. It's a proper high, right? Sorry, Morant. I think I need glasses. So we're right at the 72.47 level. We're in distribution. Let's see what the cat drags in when London opens here in 6 minutes. Okay. So the blue area is the cost basis. This is where everything's priced. This is where we paid for our stuff. This is 2 times profit, and now this will be 4 times profit. Right? That's why these zones work so well. Whether you use them on a 1-minute candle chart, whether you use them on a daily chart, why do these zones work so well? It has nothing to do with anything other than they track inventory. And that's why they call it a market. A market is a place where you take an inventory of goods and you try and sell them at a profit. If you can't, you sell them at a loss, right? What did not arrive? Sorry? Did not arrive. Sorry, Moran, I don't understand. Maybe I was talking and I didn't. So, overnight point of control is at 72.40. Okay, which is just a fancy way. What is the point of control? The point of control is telling you where the inventory is priced at this time. So right now the overnight point of control is here. Oh, my glasses. No, I think they're in the Amazon locker. I better go get them. I tried one pair, but they were like a bit too strong. So there's the overnight point of control. That's where everything is priced right now. There's yesterday's point of control. So it's showing you basically that yesterday, this is where the product was priced yesterday, 70% of it. In the overnight, we're selling it at a profit. Okay? We're selling it at a profit. Why? Because we can. Because the order flow is there. There's not as many sellers. There's not as much competition. Right? It's 3 in the morning in New York. Right? So let's see what happens when London opens. Does it correct down like it usually does? If it doesn't, right, the next upper structural stop from yesterday is up at 64 and a quarter. So let's see what happens. Right. Short sellers, if you're looking for a look above and fill of 47 like it did here and like it did here, let's see if that happens now. The trade that I'm talking about, the look above and fill of this 72.47, that is the same trade that happened here. This trade and this trade are the same trade. So if you learn how to do this one, right? If you learn how to do this, eventually over time you'll learn how to do this. Here you'll make a couple of $100. Here you'll make 40, 50 grand. But you got to learn this to work up to this. The principle and the mechanics are the same. The trade management is what is different. And that's what a lot of trading rooms won't tell you, right? The trade management is different on a larger trade. Just like managing a larger business is different than managing a small one. The principles are the same, but there are subtleties that you have to learn. So learn here and make money while you prepare. All right? Hope that makes sense. So it's kind of slow here. You can see that the business is slowing right at this area. Why is it slow here? Because we are going into 4 times cost basis. So you know when they have an auction and something is like 5 grand, 10 grand, 15, 20, you know, at some point you'll run out of buyers and it slows, right? The number of buyers slows. Not everybody wants to pay 4 times cost basis. Does that make sense? Right? Some people are looking for a deal, right? These charts are telling you how the distribution and sales are going. It's a sales chart. So if sales aren't going well, what do people do? They lower price to attract customers. See, the last time they lowered price, it brought buyers in. See? Lowered price brought in buyers. Now let's see, London's going to open in a minute. Let's see what it does. Do we stick the 47 and move higher? You know, we know that there are sellers right here. Mark them off. Know where your sellers are. Right? It's essential to know where your sellers are. Excuse me. Coin of bitterness is up $1,000. Over 80,000. That's good. Here we go. There's that seller at 48. Now, if the candles are really tiny, let the scenario play out. So if you're shorting this, your stop is 48 quarter. Okay? Why? Because that's where your seller is. Do you guys understand? So if you're short, Your stop is here. Because if you lose that seller, you're screwed. If that seller lifts, then you're in trouble. That's why your stop is there. Where are you going to bid? That 46, 45 area. There's a little position here. If you can't stay under 47, it's not worth being short. Right? There. See? You'd get stopped out. There's no sense being short and adding to it and adding to it. That's how you blow up accounts. So if you do a little long, right, if you do this as a look below and fail of 47, where do you sell? Right? Because we're at overnight high. I would just put your orders out before 51. Right? And you know, the problem with this kind of trade, a breakout trade, is you don't know where the target is. Right? So you got to use these levels. Right? If it gets back up, if it gets underneath 48 again, then this is a false breakout. All right? Right? If you're long, sell into this strength. Put some orders out because you don't know where the buying is going to stop. See how it comes back in and retraces? I don't like buying breakouts per se because they're unpredictable. Right? Yeah, building a short position, you got to have a seller. Right? You got to have the sophistication to know how to trade a short position. So if I was long 48, I'd be out at 50. I'd take 2 points. I don't care. Will it go higher? Maybe. Right? There you go, Howard. Nice. Way to be smart, Howard. Now you're trading smart. Right? Now you're not trading desperate. That's good. Right? Very good. Take those profits. Stop looking for those big home runs. You're perfect. Right? You were aiming for 50. You got out at 49 and a half. That's smart business. Don't be a dick for a tick. Or in this case, 2 ticks, right? Get paid, my friends. Get paid. Yesterday I didn't have a session because it was a holiday in England and there was no London open. So we're back to our regularly scheduled stuff. How it's going to work, my voice is still messed up. We're going to do is we'll start at 7:45 UK time. So instead of, me just kind of wasting my energy and talking for that extra 50 minutes, we'll start at 7:45, prepare you for the London Open. If it's busy, we'll go the full half hour. If it's not busy, we'll shut it down early. And then the afternoon session, I'll start at around 2:15. I used to start at 2, but end up wasting a lot of time talking. The false breakout is the same as a look above and fail, provided, Moran, it's at the top of the zone. Exactly. Right. So a look above and fail of 72.47 is a false breakout. And the reason is because the wholesalers are selling into that area. But right now they're seeing buying, so there's no reason to sell it under 47. Let's raise price. Let's see if they pay 48. Let's see if they pay 49. And if they do, we'll raise price. Right? If they won't pay 49, we'll put it on sale under 48. distribution, right? The product is priced at 72.40, 70% of it, right? They're selling it up at 49. The buying's not great, but there's just enough buying to keep the price above 48. Get it? Now, if you hold price steady, it will attract buyers. There's no trade here, if anyone's wondering. Hey, John, how you doing? Good to see you. So this slow creeping price action, the reason is it's 4 times cost basis, right? We'll see how the overnight plays out as RTH approaches. Remember, you're looking for an edge. Now, say you're still long. If you had bought those 48s, right? If you had bought the 47, 48 area, make sure you have your sell orders in the system. You're welcome, rookie. Yeah. You know what? Exactly. If there's no trade, if it's not at an edge, there's no reason for you to take a trade. You know, go to bed, go to the gym, go relax, chill out. You know, retail trading is really about waiting for that 1, 2 trades a day where they really make sense, where there's follow through, where you can make a couple of points, right? You know, 3 points on 3 contracts is $450. It sounds a lot easier than it is, and it takes a lot of time to develop it, but it's worth it, you know? It's okay to trade micros. There's nothing wrong with trading micros. That trade I took from 48 to 50 was on micro. I always start the day trading micros. Even I've got a client with a $2 million account. And when I trade his account, the first trades I take are on micro. Why do I do that? Because if I'm wrong, he doesn't lose a lot of money. I'd rather him lose 40 or 50 bucks than 500, right? There's no reason to lose money for just for the sake of losing money, right? Doesn't make sense. I use micro when I want to test a market. Yeah, like this is not tradable. There's really no trade. This is a time right now where the wholesalers are doing business. They're selling whatever they bought under 47 at 50. They're selling it gently so they don't scare away the buyers. That's how the algos are programmed, right? They'll gently sell. When they see buyers, they'll lift the offer. When they see buyers run out, they'll lower the offer to try and offer a discount, right? This is continuously happening. And look how small the candles are. They're not even a point or two, right? Look at it. They look like a barcode. This is a typical distribution balance at 3 o'clock in the morning in New York. This is not tradable. This is for wholesalers to make not money, not retail. So it's best avoided. Now, once you know this, you can avoid trading it and avoid getting stopped out. If you do that, it does a couple of things. Number one is you don't needlessly piss away money. Number two is it keeps your mental state focused so you're not running around like a chicken with its head cut off, right? Yeah. Trading NQ for a new retail trader is like trying to go and wrestle alligators. Yeah, go have coffee, Moran. Enjoy your coffee. I haven't had coffee in 3 weeks. Ugh. Because I've been trying to get my blood pressure down. Oh man, I miss it. Yeah, trading NQ is like, it's the dumbest thing in the world for a new trader. It's because everybody's looking for action, right? You shouldn't be looking for action. You should be looking for slow and steady profits. But that's boring. This is completely untradeable. Let this play out. Overall, we'll look for a correction to overnight inventory as RTH comes close. One thing I didn't look at what's the news cycle today? U.S. trade balance, nothing really at until 10. New home sales. There's a bunch of news at 9:45:10. So not usually the 8:30. Oh, so not really a crazy news cycle. That's okay, Moran. There'll be lots of trades this week. There'll be trades later on. I'm going to shut it down here. You guys have any questions? Yeah, you can disagree with whatever you want, John. As long as you're making money and you're consistently profitable. But for a new trader who doesn't know what they're doing, it's the most dumbest thing in the world. And you got to remember, John, I've been teaching thousands of traders over the years. So you're like a one example. It's a thin market. It's a very thin market. At a slow time, you might get away with it. It's really throwing them to the wolves, yeah. It's like stupidity. But hey, you know what? Do what you want with your money. Don't listen to a guy who's been doing this for 34 years. Right? You just got to know when to trade and when not to trade. And a lot of people let their frustration get the better of them, and they switch markets, and then they get destroyed. Right? But if you're consistently profitable trading NQ, all the power to you. For a new trader, it's the dumbest thing in the world because they have no idea how to manage risk. They have no idea when to wait for a trade. They don't know what a thin market is versus a thick market. And the NQ, let's go see what the NQ is right now. The NQ is 1 to 3 contracts aside. Look at it jumping around. Yeah. Look at that. Look at the spread. You're supposed to have a 1-tick spread. Right? You got a 3-tick spread. And you got one contract aside. If somebody comes in and tries to buy or sell 100 contracts, you're going to get destroyed. Right? You're going to get your ass handed to you. What am I talking about? Look at the size of the bids and offers. Look at the ES. It's much more stable. It's a thicker order book. Most people don't even know that, what a thick order book or a thin order book is. Anyway, no need to debate it. I'll let you guys go. Have a great morning. We'll see you at 2:15. Thanks very much. I do not use the middle of the zones at all. I only trade from the edge, agnostic thoughts. So I will not use the middle of the zone unless the order flow allows it. Every once in a while I will when the trade is obvious. But do you know why I like trading from the edge of the zone? It's that's where you get the best deal, right? That's where you get the best discount. Okay? I sometimes use them to exit instead of enter, just like VWAP. I like to exit trades at VWAP instead of entering them there. Yeah. Well, thanks everyone. If you're interested in learning how to do this in an intelligent manner, come to tradingsyndicate.org. We'll teach you how to trade. We'll teach you how to make money. All you got to do is be able to follow directions, right? And pay attention, right? And you have to be patient enough to learn, which is hard. Retail trading is not for everyone. It's very, very hard, right? But if you're interested, we have a 3-day trial. Come in and check us out. And we only charge $19 a month, right? And stay tuned. I've got a course on investing coming up, on practical investing for normal people, right? It's going to be coming this month. Now that I'm better, I'll get that out. We'll see you soon. Thank you so much for being with us. Have a wonderful morning. Bye for now.